This is a weekly chart of TMST. We have a cause with price objectives of $21 and $28. Here's our bullish ascending channel. We can appreciate that we just rejected the upper trend line here, and now we're looking for participants, and we probably won't see them until we retest this lower trend line. And as long as this angle advance holds, I think we'll continue to be bullish and we'll achieve this upper price objective. If we look at a daily chart, you can see how exaggerated it is, or how climactic it is. So here's our buying climax, automatic reaction. We kind of can make a little higher on less buying. That's a up thrust after distribution. We break down through this preliminary support or preliminary supply. There's our sign of weakness. We rally up. We can't break this prior supply support. That's our last point of supply. Another sign of weakness, and now we reject that area. So now we're just currently just breaking down, looking for buyers. And I speculate we probably won't find any participation until we get back down around $14. This is a daily chart of Cisco Systems. And what we can appreciate is that prices got a little overbought relative to this nice bullish ascending channel. So Cisco this is a difficult chart, but then it's actually very simple. It's difficult because we really don't have a buying climax. There's no gross signs of distribution. This is just a nice continuation pattern. People are buying the dips. If you're buying through here, you're buying risk. I think traders are going to be looking to buy the 200-day moving average. If not, we may break down and even test a lower trend line, but I think we'll definitely see some participation. The continuation pattern will continue. If you look at Cisco relative to the industry, it's outperforming the industry, but the index is underperforming the sector. So although Cisco is outperforming the index is underperforming the sector. So I think part of the problem is here that we're just not getting a lot of money into the sector here. Cisco's just kind of breaking down with very little ease. I mean, you can see they're narrowing price spreads, so supply is having a difficult time overcoming demand. But I think, again, we'll find some participants through here. You have 50% retracements around 31.50. So if we lose 31.50, that would be that'd be a little bearish and suggest that prices may break down and test this 29.50 to 30. I don't know. We'll see. This is a daily chart of GoGo. The consolidation here gives us a price target of $15.50, but we can appreciate this price is gapped up. We're just kind of consolidating. There's a lot of resistance. We're encountering a lot of supply because there's a lot of sellers that were previously here. Additionally, we have this huge spike up and this gap up on volume. We can appreciate the large upper wick and prices closing below the midway there, pretty much closing near low. So there's a lot of profit taking, a lot of selling there. Not a lot of confidence. So I think we had a lot of public participation here and consolidation. The nature at which we broke down here with widened spreads, closing at lows, although there wasn't a ton of supply, just leads me to believe that there's a lot of sellers that were still here. We rally away, but again, we rejected, and now we're just kind of consolidating. So I think this is pretty normal. I'm not confident that in the character that we have here. I think that we probably still will retest this. If we look at a weekly chart, the weekly chart structure shows that this is here's our preliminary support, selling climax, automatic reaction, secondary test, probably a secondary reaction. So this is phase A, maybe phase B. The narrowing price spreads, the lack of participation. This may be phase C, and then this consolidation is what we measure for a 1550 price target, and that would give us a breakout out of this range. Which might be our sign of strength or our markup inside the range. So it may be a good trade to try to play this 200-day moving average into 1550, take profits, and then structurally it should fade back. And then we want to actually buy the weakness here, probably on the 200-day moving average again, and then we can remeasure this weekly target, and we can try to achieve these upper price objectives. This is a weekly chart of DuPont. So here we have again, another bullish ascending channel. We can see that prices rejected the upper trend line, and now we are starting to fall back towards support, toward the lower trend line. I think we need to look at the daily chart to kind of examine this a little bit closely. But it looks like we're going to trade into the 200-day moving average, probably between $76 and $74. The daily chart here, we actually do see some structure, so we do have some climactic volume. This stall here is probably our preliminary supply, our buying climax, our automatic reaction. You can call this, an upthrust after distribution or a second test. This here would be probably a UTAD, an upthrust after distribution. But again, we secondarily kind of test this level. We test the support identified by the automatic reaction again and again. But here, there's a couple key things that present here. So we have, this is the buying climax. We have climactic volume again with narrowing price spreads. This volume is so much greater than everything here. Why didn't it actually make new highs? And it failed to do so because there's some distribution. And then prices rejected here with increases, closing at lows. This is starting to, tell us a story that there's some supply emerging. We rally back, we test it again. Despite this big effort, we create an upthrust and we reject it. And now we try to go again, and there's a volume spike. Prices close near lows, and then prices break down. So we have some selling in the highs and distribution through this zone here. We have some distribution here. We have some distribution here. So if we have profit taking through here, we're going to retest this vertical bar. And that's exactly what we're doing. So if we're going to retest this, this bar because there's some distribution here, we're likely to break down a little bit lower. If we measure the consolidation period, we have a price target of $77, and that would actually kind of correlate with an initial sign of weakness here, and potentially breaking down further. But this also is right around the lower trend line of the support. So although we may have some large term distribution going on, the current distribution would trade into the lower trend line.